Welcome to the Behind the Wind podcast. I'm Lauren Lane. For over 50 years, the LSI team has been dedicated to the science of business development. We've seen the impact of our work and how it's evolved into economic development and now social impact work. This week, Sean sits down with Alan Beard, the CEO and Managing Director of Interlink Capital, a management consulting firm and fund manager based in Washington, D.C. They're going to discuss Alan's personal and professional background, the international transaction challenges faced by small and medium-sized companies, the history of Interlink, and some of the projects they're working on today. Let's get started.
Well, thanks for carving out time to do this with us, and look forward to it. I really, it's been so great reconnecting with you, and really excited about some of the work that we're doing together. And I just saw a friend of yours, Tim Stewart, who told me to tell you hi. And it's been interesting that we've had all of these contacts that have overlapped in our careers, and that now we're working together. So yeah, it's been fun. So thanks for carving out this time. But maybe as we start, could you just talk about your career history, which is so interesting, and I know, so interesting that maybe you ought to write a book about it. I know you've got a book.
I've actually done that.
I know you have. So, but yeah, I think that's a great place to start. And then, there's a lot of things I want to cover with you over the next hour, but let's start there.
Sure. So, as you know, I'm a Utah boy and grew up in Bountiful, went to the University of Utah, got my BA there, and then came back to Washington, D.C. and went to George Washington University, where I got my MBA. And the focus of my MBA was on international business. And really, that was partially because I also served a Mormon mission and went to Central America, and was sort of intrigued with the whole, what we called back then, developing countries. That's no longer politically correct, so we called them frontier markets or emerging markets, right?
Exactly.
But it was an eye-opening experience for a number of reasons, but most of which is I had really been very European oriented. My mother was British. I'm actually a dual US-British citizen. And so my orientation was Europe, and I assumed that's what all the world was like once you left the borders of the US. And when I got to my first location in Honduras, which is one of the poorest countries in the Western Hemisphere, I found that not everywhere looks like Europe. So that kind of woke me up to, how could I do something from a business point of view to help those countries, if you will. And that's really what took me in the direction of ultimately getting into the Export-Import Bank, which is a U.S. government agency that's focused on helping U.S. exporters sell their products overseas by providing financing. And from that, I really started working in emerging markets and frontier markets, which has been primarily where my career has been for the last 30 plus years.
It's fascinating. We're gonna dig into this a bit, but let me ask you a couple things. I don't know if you and I have ever talked about this. Maybe we have, but I grew up in Bountiful as well.
Oh, did you?
So yeah, I guess you and I have never had this conversation, but I grew up in Bountiful. Did you go to Bountiful High?
I went to Viewmont.
You went to Viewmont. Okay.
I went to Woods Cross when it was a 2-year school, and then 2 years at Viewmont.
So, this is cross-town rivalries, but the Bountiful, especially when we were going to school, was such a small town at that time that it really was. We knew everybody at Viewmont and Woods Cross. It was that small of a community, and so that's fascinating. That how did your parents end up in Bountiful as immigrants?
So my father, he grew up in Salt Lake, but he served an LDS mission to Britain, and he met my mother there before World War II.
My goodness.
And then he went off, he finished his mission, went off to war, actually was stationed in India for almost 4 years during World War II. And when he came back, I guess back then the Deseret News would publish immigrants that were coming from Europe to Utah. And there was a notice about my mother and my grandmother, who was probably feeling the need to get my father married off because he was in his 30s at the time. And this is 47, 48.
Right.
So as Brigham Young said, he was a menace to society. And so his mother invited my mother to a dinner, and they rekindled their friendship from the mission, and the rest was history. They ended up getting married about 6 to 12 months later, and immediately started having a family and moved to Bountiful in, I think, like 1951.
Wow.
Something like that.
Amazing. So I'm sure, I mean, and then that was even a smaller community, and they probably knew, all of my relatives. But where in Bountiful did you grow up?
So this was by South Davis Junior High School.
Amazing.
And back then it was rural. Even when I was a kid, we had horses behind our house.
Definitely.
And then unfortunately the neighbors sold out, and they all became tract homes. And we were the last to sell because frankly, our horses were always knocking down the fences and, walking on the neighbors' new lawns. And so and horses, for people who don't like them, don't smell very well. And so my parents saw the writing on the wall. They sold out, and we moved the horses to Farmington, but they continued to live there at right next to South Davis Junior High School.
That's amazing. My grandparents, unbelievably, about that time, built a house on Davis Boulevard, which there was nothing behind Davis Boulevard in the early 1950s. It was as high on the mountain as you could go. Lived there for about 30 years. My mom's, this was my father's family, and my mom's family built a house on 2600, just a little bit north of South Davis.
Sure.
And then I grew up above Bountiful Boulevard, so and had this great, just an amazing, really idyllic childhood in the mountains, and continue to have a love of the mountains today. So that's
Bountiful was again in the 60s when I started growing up. That was still very farm oriented. We used to ride our horses right past Bolton Elementary School up into Corner Canyon, and that's just the way it was in the 60s.
Well, and it was when I was growing up too. I mean, I spent my childhood in North Canyon and Mueller Park and Sessions Peak. I mean, that was my childhood. So it really was an amazing place to grow up, and I continue to have a love of the Wasatch, I think, from spending so much time in the mountains as a child. So, and then at some point you must have moved north to be realigned for the Viewmont boundaries. What was there a point?
They didn't have, I think they needed to rejigger the boundaries. So I actually didn't move. My parents were in their house for like 50 years before they passed away.
Goodness.
But they first had Woods Cross, which was a new school. And then, it didn't have enough to have a high school. So it was only 2 classes or 2 years.
Yeah.
And then I went to junior and senior at Viewmont. And then I think after I graduated, I think that was the first year that Woods Cross began to build they started a junior and senior level class.
That's amazing. That's great. That's great history. So, you got pulled into DC in your graduate program, and then never left. You've been there ever since.
Yeah. So I had an interest in how the government worked with business to work in frontier and emerging markets. I'd learned enough, I guess, to realize that private capital in and of itself wasn't necessarily willing to flow to countries like Honduras. And so they needed some kind of catalyst to get the capital to go there. And really, that's where the government, whether it's the US government or European or Asian governments, stepped in to try and figure out ways to channel capitalism into putting their capital at risk in places where they wouldn't normally go. And so, to your point, I came back here because GW at the time was recognized, and still is, as one of the top international business programs.
For sure.
And so I went to it with the whole desire of trying to figure out how to work with these government institutions in emerging markets. And to your point, I thought I was just passing through Washington, and 30 plus years later, I'm still here. We joke around here that, you can be from anywhere in the country and have lived in Washington, in my case, 3 decades. And when people ask you at a cocktail, where are you from? You say, well, I'm from Utah. They go, well, how long you lived in Washington? Well, 35 years.
Oh, I hear that all the time too. I mean, it's nobody, there are just so few people from Washington. It's just amazing.
Yeah.
So, and that's amazing. As we said, so many of our mutual contacts kind of did the same thing, either was working in the Congress or, it was there for a short period of time and then never left. And I almost did that. 30 years ago, I was really... I'd made an offer on a house in Potomac. At that time, I thought that's where I was going to be, and I just decided, no, I cannot do that. So I've continued to commute into Washington every month for the last 30 years, and yeah, I mean, I know so many people that got into DC and then it just never left, like you. Tell me about XM Bank. I mean, this really forged a lot of your in your future engagements and the work that you have done through this international finance consulting over the last 30 years, which is just, I think, absolutely fascinating.
So I actually, before I started at XM Bank, I had a little bit of a detour, which often happens in your career. In my graduate program, I had read the deindustrialization of America, which at the time was kind of a big polemic that was going around in academic circles, and I had kind of had a taste for what was going on. Remember, this would be 1984, right at the height of when people were beginning to really offshore industrial companies out of the U.S. And so I had the opportunity to join the International Trade Administration in a program that wasn't very well known in that agency, but is very well known in the Labor Department, which is called the Trade Adjustment Assistance Program.
Yes.
In the Labor Department, that's a multi-billion-dollar program. And in the Commerce Department, it was a multi-million-dollar program. And the idea was that, again, this is when suddenly imports were flooding the US market and putting US companies out of business. And so we worked with companies like Lennox China, Harley Davidson. Those were our successes. And I'd love to tell you we had lots of successes, but we had dozens of failures. And so I learned an awful lot about being in the trenches and writing up credit documents. And unfortunately, a lot of those loans, what would happen is we would hire a Booz Allen or an Anderson to go in and tell Harley Davidson or Lennox what they needed to do to rationalize their factory. And that typically required them to buy some new equipment, maybe have some more working capital. And so we were the finance arm, so that somebody had a plan, and we provided both fixed asset and working capital financing. And as I said, we did have some successes, but we had some spectacular failures, and learned an awful lot about how truly loan agreements work, and security documents, and what happens in bankruptcies, which has actually served pretty well over my career, because what you find when you're dealing with lending into these very difficult frontier markets is that oftentimes these loans have to be restructured for often the same reasons. The numbers didn't come in as you expected, or the market was harder, or whatever. And so I did work at the ITA for a few years, and then went to Exim Bank and helped them stand up a small business program. So this would be 1989, and Exim Bank was still known at that time as Boeing's Bank or GE's Bank. They had very little to do with small business, and frankly, when I went to Exim Bank, nobody there knew anything about small business. They didn't. And again, this is just as spreadsheets were coming around. They didn't even know how to spread financial statements for a small business, because most of what Exim Bank was doing at the time was taking risk on big banks in foreign countries, or the Ministry of Finance of a foreign country. And this idea of you were going to lend working capital to a US exporter, and you had to understand their financial statements and find a reasonable assurance of repayment, was completely foreign to Exim Bank. So I helped create what was their first spreadsheet analysis program that Exim Bank used, and helped actually create a lot of the documentation for what has now become the Working Capital Guarantee Program, which is their premier small business lending program. And
some history on Exim Bank, just I mean, you and I have been working with Exim Bank for all of our career, but for those that don't understand it, my understanding is that the government set up Exim Bank during the war. Is that the history?
It actually goes back to the 1930s, and believe it or not, it was set up to try and facilitate trade with Russia, which it never did. And it's, even though it's called the Export-Import Bank, and indeed there are export-import banks from many other countries, and they're all called Exim Bank, they don't really support imports, because as a public policy point of view, governments aren't really trying to encourage imports, they're trying to encourage exports. Right. So this was set up in the 30s, and the role was essentially to provide financing to help buyers, overseas buyers, buy US goods and services at a reasonable price with long-term lending. So what you find in most emerging markets is long-term capital is either non-existent or it's very expensive. And so if somebody wants to buy a GE turbine, and that's $50 million, they don't have cash for $50 million, but they may have the creditworthiness to pay that over a 10-year period of time. Right. But if they go to their local bank, they don't have the capacity to offer 10-year financing, and they certainly don't have the capacity to offer 10-year financing at what approximates US interest rates. And so Exim Bank's role is to try and help those countries buy US goods and services that can help them, and obviously help our exporters, which ultimately generate US jobs.
Exactly. So fascinating. So you were helping them establish relationships and deal flow with small businesses, which they had never done before the 1980s. I mean, that's
they always did it kind of as window dressing, but when they set up the working capital program, which when Exim Bank reached its kind of zenith about 7 years ago, they were doing about $70-80 billion a year in loans, and about 10 of those were small business loans, and that was a real departure from the old Exim Bank, which again, they did a few small business transactions, but their bread and butter was Boeing, Motorola, which at the time was a big player, GE, Caterpillar, John Deere, this was their bread and butter. And having some small company from Utah, which you may know of a small company up more where your corporate headquarters is, called Pacific TriStar.
Of course.
They buy used equipment and refurbish it and then sell it overseas. To have them approach somebody like Exim Bank, before the 1980s, Exim Bank would have said, "Why are you coming here?" They wouldn't have known what to do with them. Whereas now, Exim Bank is very sensitive about its small business efforts. And indeed, Congress holds its feet to the fire and expects 25% of its business to be directly related to small business.
So, and XM Bank is still, it's not a federal agency, is that correct? It operates under the oversight of the Congress, but is independent. Is that correct?
It is a federal agency. It's what they call an independent federal agency, but it's run like a corporation.
Right.
So they do their own financial statement. They're supposed to be self-sufficient. From time to time, Congress has had to bail them out, but they are run like a corporation. So the management there, you have a CEO, you have a CFO, you have senior VPs and VPs. So it's run very much like a bank, and their real efforts are to try and support the financial community. So they don't want to, U.S. agencies are very sensitive about crowding into the private sector. And so they don't want to be seen as a replacement to your local friendly and your market Zions Bank. But what's happened is that trade finance, this idea of extending credit across borders, is a high touch business. So it's very expensive. And banks, especially US banks, have tended to not want to get into this business. And while there are pendulums, where they suddenly discover it and say, hey, we should do more of this, and then something happens like a financial meltdown and they say, no, we're not going to do that, and they get out of it. Right now, the long-term prognosis is many financial institutions have really gotten out of the trade finance business because it's very labor intensive, and it's complicated. And not that the risks can be mitigated, but it's just, they'd rather do credit cards or SBA loans or things like that are a little more cookie cutter, and that doesn't tend to lend itself to trade finance.
So I'll try to summarize this, because this has been a challenge for our company over the years, and a lot of small and even medium to intermediate sized businesses. The challenge is, even if a company has an exceptional balance sheet and strong financials, if that company is doing work with a foreign entity, has foreign revenue, almost no banks in the US will allow those accounts receivables to be used as collateral for a traditional loan or a line of credit. So they're penalized from doing business. I mean, this is crazy to think about this even today, but you're actually penalized from doing business with foreign entities. And over the years, we've done a lot of work with foreign entities in Europe and Asia, and it's always been a challenge that when we would have audits by our banks, under the covenants with our banks, they would exclude all of those assets, if they were receivables on your balance sheet, if they were, if you had, as you said, hard assets, or inventory, they would take that off your balance sheet and exclude that as collateral, meaning that your ability to borrow or use a line of credit against that collateral would be reduced. And it's been a huge problem. I mean, the two things that have really, I think, have been not understood well by the Congress and by the SBA are that that you cannot get traditional financing and work with traditional banks, and institutions, lending institutions, if you have either, if you're a small business and have either foreign receivables or government receivables, which is just incredible.
Yeah.
And yet all of these agencies and we're going to get into this a little bit more, because I mean, this is really, I think you've got something incredible as you and I have talked about strategy going forward. But the irony is that the Congress and the small business committees in the House and Senate have for years been beating up agencies. Why are you not giving more work to small businesses? And the SBA is in there beating up the agencies. Why is there not more work? Well, they have not understood that most of these small businesses are unable to get traditional lenders to give them financing. I mean, even not traditional loans, lines of credit, any kind of instrument necessary to manage just usual working capital and increased capital equipment costs, if it's a government customer or foreign customer. So
well, you really hit the essence of why there's a need for Exim Bank, and unfortunately why it's not understood by the political establishment. They get caught up on the fact that Boeing has its aircraft financed by Exim Bank. The Emirates airline buys their aircraft, and then Delta can't compete against the Emirates in flying to Dubai. And that has real policy implications, to be sure. But the vast majority of companies in the U.S. are small business, and whether it's the U.S. government or overseas customers are a large portion of their potential revenue source. I mean, right now, the combined GDPs of what we used to call developing countries, now emerging markets and frontier markets, is larger than the developed world.
Exactly.
And so, banks may be willing to take risk on receivables in France and Germany, but perish the thought, Turkey or Saudi Arabia or places like that. And so there is this kind of disconnect. And again, because banks obviously are going to do what's easiest for them, they'll just steer away from that business with most, with a few exceptions. And I've told you this story before, but Silicon Valley Bank, which of course has been in the news because it imploded earlier this year,
right,
but they were a real example of actually understanding what you just have articulated. Exactly. And this was in the early 90s. I worked with Silicon Valley Bank and essentially got them into the Exim Bank program. And what they understood early on, again, this is in the 1990s when most of what Silicon Valley was doing was hardware. Of course, now it's mostly software or social media, but back then it was hardware. And where were they selling the hardware? Where they were selling it to IBM, but the IBM factory wasn't any longer in New York, it was in Thailand. And right. So the banks were still looking at just exactly what you said. They'd say, yeah, but this is a Thai receivable. And as the borrower, they'd say, yeah, but it's IBM. Yeah, but it's Thailand. It's not New York, right? So we're not going to count that in your borrowing base. And what Silicon Valley Bank understood early on was that this was a really important tool to help small businesses scale up. And they took that program and embraced it. And for about 6 years, we acted as their back shop. Every international transaction they did came through our business. And they became the largest user by transaction number of Exim Bank's programs.
That's right.
To the point that they suddenly got the attention of the majors, Wells Fargo, B of A, who were saying, Silicon Valley Bank, I mean, they're just a small bank. How come they're getting this business? And then they got on board and began to use the program. And that's the way competition works, and it lifted all boats. So it's an important ingredient. It's part of what Exim Bank does, and you've kind of alluded to this. SBA has also created its own version of this ability to help banks take into account the overseas business and take some of the risk so that the banks feel comfortable. And those programs are really important.
Well, and while we saw this over the years, working with a lot of our foreign-based clients, and also working with government entities, our team I would argue that there has not been a company that has been a bigger advocate for small business than LSI. I mean, we have really lobbied hard to get important programs set aside for small business, and yet we've seen this with the government receivables as well. I mean, some of these
really the same issue.
Same issue. These really strong, small, medium size, even what would be considered outside the SBA as a large business, they could not get any kind of financing. These banks would not take a risk if they were doing work with the federal government or, heaven forbid, a state government. It was even worse. It's even worse. So there over the years, and despite that, I mean, we would say this is a roadblock for job creation, economic development, all the things that so many of our politicians and agencies are committed to in their charter, and yet they never understood it. They would say, yeah, we're going to set this aside for small business, and why are there not hundreds of small businesses going after this work? Well, the big part of it is that the investment capital, even the working capital piece of this, or if you need equipment, or you could not get financing for it. It was, and still is the case. I mean, I'm saying this like it's been solved. It's not. No. It is still a huge problem. If you go to any marquee bank and try to get a line of credit or a loan, they will, as you said, exclude government receivables and foreign receivables from your collateral. So it's a challenge.
Well, and you hike that up one more level, and you see this now in today's world. I mean, the U.S. has had the luxury of having this robust, huge marketplace that, most business people think, as long as I'm selling into the U.S., I'm fine. But as I said, I mean, half the world's economy is now outside the developing world, and 3/4 is outside the U.S. But the problem that you have is old habits die hard. And so American companies traditionally have not been very creative in going and marketing their goods and services overseas. Whereas you take a French or a Japanese company, they'll come in, they'll provide the pricing in local currency, they'll bring the financing to the table, they'll bring the training to the table, they'll practically do everything but sign the documentation for you. Whereas American business executives have tended to say, no, here's my product. If you want to buy it, figure it out, and then I'll sell it to you, right? And my first position is, because it's overseas, is give me cash. Right. Well, you're making even if you have the best mousetrap, you're making your sales proposition a lot less attractive than if a Chinese company shows up and says, look, it may not be as well engineered as the US product, but it's cheaper. Plus, I'm going to provide you all the financing. I'm going to train it. I'm going to train you. I'm going to install it for you, and I'm going to operate it for you. Which one are you going to take? Well, you're going to take the Chinese product every time.
Exactly right. So that really laid the foundation for the rest of your amazing career. I mean, talk about then springboarding off of that. What was next?
So when I was at Ex-Im Bank, I was going out to the marketplace, actually to Zions Bank in your neighborhood and First Security Bank back then, and trying to convince them that they should accept the products that Ex-Im Bank had to mitigate their risk so they could be more aggressive. And in that process, again, I had some serious success with Silicon Valley Bank, and I joined two guys who were primarily marketing guys, who we said, well, why don't we work in Silicon Valley and help all these technology companies get financing? And so in the early 90s, literally we were doing probably 6 to 7 financings a month, all high-tech companies, venture capital from Draper and Kleiner Perkins, all the big names, and essentially putting together financing and helping them sell their products to Asia and Europe. And so we took that company and grew it pretty aggressively. Became more diversified than just doing Ex-Im Bank. There are other tools in the U.S. government policy kit that do similar things to Ex-Im Bank. You may recall the agency called OPIC, which is now called the Development Finance Corporation. And what Ex-Im Bank is for exports, OPIC, now the Development Finance Corporation, is for direct foreign investment, where they would help U.S. companies get the long-term capital to set up operations in a local market. So one of our big successes there was one of the baby bells based out of Utah called U.S. West. U.S. West was unfortunate when it was divvied up out of AT&T, in that it ended up with the largest footprint and the lowest teledensity of the other 4 baby bells. And so they kind of looked around and they said, well, we can't do what Bell South is doing, and we can't do what the others are doing. Let's go overseas. And so we took them overseas, and we used what was then OPIC. And then there are a number of multilateral institutions. The World Bank has one called the International Finance Corporation. And we put together hundreds of millions of dollars of debt financing so they could put up telecom properties in Eastern Europe, which was then opening up after the fall of the Berlin Wall, and actually the former Soviet Union. U.S. West was extremely successful in Russia.
Yes.
And then ultimately they sold all those assets to another telecom and made billions of dollars on it. And that was really a function of using Ex-Im Bank's sister agency called OPIC.
It's amazing. So you did that for a number of years under...
So that was under a company called Delphos International, which still exists. We sold that business to what was then Bank One Capital Corp, which had an executive who had left Citibank with a bruised ego called Jamie Dimon. And he built Bank One Capital Corp into what's now JP Morgan Chase.
Yeah.
Exactly. And so we acted as the merchant banking area for JP Morgan Chase at the time, and did a lot of Fortune 1000 type financings with everybody from Lockheed to IBM to a who's who.
And then you eventually joined Interlink, and
so Interlink was actually a client of ours at this other company, and another Utah connection. The co-founder of Interlink was Tim Bridgewater.
Sure.
Who, a lot of people know politically out there. He ran unsuccessfully for Senate and for Congress a couple of times. But Tim had got together with Neil Bush, one of the Bush brothers, and they had set up a company called Interlink. And their partner was the CP Group out of Thailand, which is still one of the largest conglomerates in Thailand. This is in the 1994. They were, according to The Economist, they were on the cover of The Economist. The CP Group was the largest Western investor in mainland China. And so anywhere they needed US capital or partners or know-how, they came through Interlink to get it. And so they had a great run. And I got reacquainted with Tim. Tim had been at Exim Bank when I was there. He was, we affectionately say I was an underwriter, so I did the upfront deals, and Tim worked in the workout division. So I created the messes and he cleaned them up after me. But anyway, so I got reacquainted with Tim. They hired me to help them get some IFC money, the International Finance Corporation being part of the World Bank, for a project in China. And after that, Tim and I stayed in contact. And when Tim decided he wanted to move from what was then, he was living in Houston, back to Utah and run for office, he asked me if I was interested in joining him and his team and kind of helping grow Interlink. And I was getting tired of where I was at. And so I joined him in 2003. And then he promptly ran for Congress and was kind of not accessible. And so I did what I do best, which is I turned to, well, let's put together financings for companies that are trying to do business overseas. And so I've been here at Interlink since 2003, set up their Washington office, and we've grown it to about 20 people, about, depending on what time of the year, 12 to 15 full-time employees, and then maybe another 12, 15 contractors.
And you've done so many interesting deals over the years, but I think one of the most amazing projects, engagements that you have worked is the loan guarantee program with the Department of Energy. And I mean, there is, if our government executives would take this model and use it inside of these various agencies, it really would be transformative to the U.S. economy in so many ways. And I'm going to let you talk about this, but I think it was brilliant. We were going through a similar, much smaller engagement with the Department of Interior at about that same time, and it has really never gone anywhere. But I'm going to tee this up, Alan, but before you talk about this, is saying the government right now is investing billions of dollars. I think the CHIPS Act is something, almost $200 billion, a $250 billion that is designed to reshore manufacturing by U.S. companies, mostly small business companies. And I mean, I think that the element of this strategy that is lacking is this loan guarantee initiative. So maybe you could talk about how this came about and the details of the loan guarantee program through the Department of Energy, because it is brilliant.
Yeah, so if you think about it, frontier and developing markets aren't a whole lot different than what we're talking about. These markets where you're dealing with segments of the markets that banks don't want to deal with for whatever reason. There may be political reasons, there may be risk reasons. And so these markets sometimes need a push to get capital to go in that direction. And so how we got involved with the DOE is sort of early in my career. I was really focused on primarily short-term to medium-term lending, and then had the opportunity to do what was the first project financing at Exim Bank in 1990, about 1996, which was a geothermal project in the Philippines. Well, geothermal is a green energy. It's a renewable energy. In fact, it's very virtuous because unlike solar and wind that's intermittent, geothermal is base load powered. So I got involved in geothermal power. Ormat was a Israeli company listed on the New York Stock Exchange, and we did a number of geothermal projects with them around the world. And ultimately that led to us setting up with the German government an early stage geothermal fund for Latin America called the Geothermal Development Facility, which we still operate here out of Washington, D.C. But to get to your point about the DOE, we had done a number of renewable projects overseas. And when they stood up the DOE loan guarantee program, the DOE is very comfortable at doing grants and technology transfers, but they had never done any structured or project financing. So they reached out to a colleague of ours who since passed away called Dick Corrigan, and he arguably became the father of the loan guarantee program at the Department of Energy. And so we have worked with that program actually got started under the George W. Bush administration. It really ramped up during the Obama administration. And so we've been involved in that project from the beginning and still continue to be one of their qualified financial advisors. So most or many of U.S. government agencies don't have the personnel to underwrite these very complicated transactions. So what they do is they outsource them to financial advisors who are paid by the Department of Energy. So if somebody comes in and says, you know, I want to do a solar project in Utah, they put together their application. They themselves may hire experts to help them put together that application. But once it comes to the DOE and it meets its kind of minimum threshold, they then outsource the underwriting to a stable of financial advisors, which includes Interlink Capital Strategies. And we still continue to play that role at the Department of Energy. And to your point, what they're trying to do is fill the gap of trying to support technologies that may not be completely proven or may not be well established in the U.S. They may have been used in Europe, but not here in the U.S. And take that risk because lenders are really risk averse. I mean, even in a traditional project financing, like Mitsubishi, when they came out with their next version of a turbine, Mitsubishi is one of the world's premier power generator manufacturers, along with GE. But when Mitsubishi first came out with their next generation turbine, most of the banks were uncomfortable taking risk on the new turbine because, again, these are 10, 15-year credit extensions, and who knows how well the turbine is going to perform for that 10, 15 years. And so you can imagine if they're that risk averse for traditional, electric turbines, what it's like when you're talking about, oh, we're going to take some innovative solar and we're going to wet it to battery storage. And we're going to, that's, again, it may be tried and true technology, but how's that going to perform over the 20, 25 years of a concession?
Exactly. So, I have a lot of friends who are bankers and have worked with banking executives over the years. And over the last few years, I've just said, you guys must be really excited about artificial intelligence. This AI is just going to replace all of you because none of you have the ability to take any kind of risk. There's no thinking involved. You just look at ratios and that's it. There is no subjectivity in anything that you guys do. You could outsource this to an AI chatbot, and they will have no need for you in any of these banks. So you're exactly right. But I think
well, and it's also a regulatory issue, as you probably know, because
it is for sure.
My brother was the CEO of what is Alta Bank now, used to be called Bank of American Fork, and he took that public. And as he would rightly say, I mean, on the one hand, they were being given all these directives by the government to lend to these risky, segments of the market. But on the other hand, the regulators were saying, don't you lend to those parts of the market or we're going to penalize you. And so you have that problem in banking, and really what's happened, and I don't know if the layman understands this, but now in the US anyway, the majority of lending to businesses is not through banks anymore. It's through non-bank financial institutions.
Right.
Indeed, we have another fund that we manage called FDI Capital, which is a non-bank financial institution, which is making the kinds of loans that maybe 20, 30 years ago a bank would have made.
So why I'm so excited about the work that you're doing and how this applies to these, especially over the last 3 years, the investment that the Congress and the administration has made into really the COVID recovery, what we call the the Infrastructure Investment and Jobs Act, IIJA, nearly over $2 trillion being invested into U.S. projects, and with a strong emphasis to small business. What excites me about this, Alan, and your work is that to distill this down is if an agency will be willing to guarantee the loan, they can force multiply whatever reserve account that is necessary. And as you and I have talked about, most of the time it is going to be a small percentage. I mean, you and I have been talking for some time now with one of the very large U.S. federal agencies who have an interest in implementing a loan guarantee program. And I think they started out with $1 billion. They're going to try to go to $7 billion and get the Congress to appropriate this. In their mind, they're thinking, oh, we've got to have that entire, account, right now $1 billion, set aside for all of these defaults that are going to happen. Well, we really believe that it's going to be a small amount of companies that are going to default on those loans. They can leverage that risk where they're guaranteeing these defaults against commercial financing, a Chase, Wells Fargo, Goldman Sachs, all of the marquee accounts, and not to mention the smaller banks as well, or medium-sized banks, that will then have the confidence to lend this money to these businesses to do this work. And with that, they can increase jobs and reshore this manufacturing. I mean, there is so much benefit to this. So I think the work that you did with the Department of Energy, and like I said, we dabbled with this in the Department of Interior. I think we did 7 projects under the Department of Interior similar. Not one of those, and these were with some high-risk entities, not one of those notes were in default at any time. And in fact, many of these loans were paid back early, where the department guaranteed the loan. The entity was able to get traditional financing, and it allowed them to implement the project and pay back the note quickly. So it really is the missing element of this that I see, that together, the work that we're doing, the work that you've done traditionally, and not to mention the foreign business. I mean, we've let's not overlook, this is really also still such a problem with any foreign business. So you take the government business and the foreign business, you want to create new jobs, you want to create growth for small business. This is the catalyst to make this happen.
Yeah. I mean, there are those that would disagree with me, but if you buy into the thesis that banks are being regulated in such a way that they're being hamstrung to make risk or to take risk. And I'm not talking about foolhardy risk. I'm just talking about, sort of traditional risks, which is how a lot of bankers feel, is that they're kind of in a straitjacket and they're damned if they do and they're damned if they don't. And again, as a consequence of that, and I'm not saying it's the only cause, but more of the commercial lending now is done by non-bank financial institutions.
That's right.
If the government can step in and help mitigate those risks at the margin, those programs are actually going to be profitable. Just to go back to what we said earlier, when Ex-Im Bank set up this working capital guarantee program, just before I got to Ex-Im Bank in the 90s, they had budgeted that this was going to be a $20 million write-off. They just said, we don't know what we're doing. We know that, I mean, I had some insider knowledge of what came out of the board decisions, and they basically said, but we got to do this because Congress is telling us to get into small business. They never had those kind of write-offs.
Yeah.
They never did. I mean, I'm not saying that doesn't occur. And of course, the Department of Energy's loan guarantee program had some early spectacular failures. Everybody likes to talk about Solyndra, right? Or right now they're talking about some of the electric vehicle companies. I mean, if you're going to take risk, you're absolutely going to have workouts, and some of those workouts are going to go badly and you're going to lose money. There's no question about it. But in the whole, to your point, if they're willing to help on the margins, the multiplier that they get from all of the employment and all of the additional companies that are created, far outweighs whatever the delta is.
This organization has asked us, what do you think the default rate will be? And we've said 1 to 2%. It'll be, and they can't even comprehend that. They're even thinking, we've got to have a 10% reserve at least or more.
Yeah.
And
that was Ex-Im Bank. That was Ex-Im Bank 30, 40 years ago.
Exactly right. So I think it's brilliant. It really is the catalyst to making a lot of this happen. And I see that there's such a future for Interlink and what you're doing with this work and continuing to help organizations understand the importance of capital, the importance of leveraging the market, leveraging commercial banking, traditional commercial banking through a program like this to help small businesses especially, but even the medium and what the SBA would consider a large business access capital for these foreign and government contracts. It's critical. I know we're sort of at the end of our scheduled time, but do you have just a few more minutes?
Sure.
A couple things that going full circle that I wanted to come back to was you had said to me some time ago that Ex-Im Bank now has a new charter where they are looking at stepping in like they've done over the last almost 90 years, I guess, but stepping in and working with businesses that have government contracts. I mean, could you talk about that for a minute? Because I think that this is really an exciting option for some deal flow within the federal government, especially.
So Ex-Im Bank has had some political problems. Again, I kind of alluded to it earlier with this idea that some of the large corporations feel that when Ex-Im Bank finances, in the case I mentioned, a Boeing aircraft to the Emirates, they're putting Delta Airlines at a competitive disadvantage because the Emirates are getting a subsidized airplane, but Delta has to go buy a airplane with commercial lending terms. And so, that is a policy issue that has to be balanced, to be sure. But as a result of that issue, basically Exim Bank was put out of business about 5-6 years ago. And for a year, they were prohibited from doing any new business. And then when they reopened, they didn't have a board, so they could only do small transactions. So they've only really had a fully constituted bank now for the last 2-3 years. Well, a lot of history has intervened and the market has kind of moved on. And indeed, I was just at Exim Bank's annual conference last week, and there's some pessimism that they're just not hitting the numbers that they once were. As I said, and before this political turmoil, they were doing $60-70 billion annually in loans, and they're doing 10, 15, 20 billion. So it's quite a reduction in what they're doing, and so they are looking at other ways to be more creative, to be more helpful, and there are ways that one thing that they maybe kind of applies to what you're talking about is they're much more creative in how they interpret export financing. So remember, their charter is to support exports. Well, if you take some of the small suppliers out in Utah who sell to Boeing, and Boeing puts that into their aircraft facility out there at the Salt Lake airport, and that then goes into an aircraft that's sold to the Emirates, that's an export. It's an indirect export. And so Exim Bank can get involved in a less direct fashion in what is called an export than it could 5, 10, 15 years ago. And they're looking for creative ways to try and get into areas that they think play to their strength and can help particularly small business, be successful in winning this kind of business.
I think it's exciting to see them dabble in this, take this kind of risk, because it is an underserved market. All of the evangelizing that we have done with the Congress, with the administration, with the Department of Commerce, with the SBA, with the various agencies, they just do not understand how critical this is, and that there is this gap that exists there's a handful of organizations that are dabbling in this, and I'm telling you, they are. I mean, what's incredible, and I hope somebody, if anybody is listening to this and still has this misconception that the federal government is slow to pay, that you're going to get caught up in all these regulations and title and whatnot, I can tell you this, that of our largest clients, they repeatedly tell us that that the U.S. federal government is their best client for paying invoices. The federal government now, for most agencies, is turning invoices in 5 days, and so, and you look at the amount of invoices that are rejected. It is such a low risk for banks, private equity, venture capital. I mean, you want to pursue a strong business with really low risk, and despite this ongoing history, I talked to an organization just last week who said we still will not lend to or lend against receivables that are with the federal government or state government. I should shake my head and say, you guys are really missing out on a market. I think it's exciting that you are taking this history of this hard to obtain financing with these foreign projects and bringing it to government, because it is such a need.
You know, one of the things, and this is probably not something that we're going to solve in our life, Sean, but you know, having worked a lot of my career overseas, especially European and Asian governments work hand in glove with their corporations.
That's right.
And unfortunately, culturally, that's not the way it works in the US. It's very adversarial. Everybody still remembers Ronald Reagan's line, "I'm from Washington, I'm here to help." Nobody believes that, right?
Exactly.
And there, believe you me, I have my frustrations with the IRS and, you know, all the other government agencies that we all know, you know, and love dearly. But we've never really been able to get that kind of seamless approach where the government and the private sector are always kind of working hand in glove. I mean, there are instances where they do, but I will tell you, and again, as I mentioned, we manage a fund for the German government, and the way the companies are deferential to the German government and vice versa is just unheard of here in the United States. I mean, it's much more adversarial. It's much more, you know, keep the government as far away from me as possible. That's why I hire my white shoe law firm in Washington to keep them out of my business, right? But there are, you know, key areas where government involvement are critical, and companies recognize this, but it just culturally, we're just different in the U.S. We view the government very skeptically, as we probably should.
But we've had that same experience. I mean, throughout Europe, yeah, I mean, especially the Swiss, the Germans, the French, it is a very different relationship than in the U.S. And I think oftentimes it is necessary and better to foster and cultivate, especially small business, which is what so many members of Congress claim that they're about, is promoting jobs through small business. So
yeah. That's what we'll tackle in our next life, Sean.
Well, listen, hey, there was so much that I want to talk to you about. Let's do another round of this, because there are some other things that. But as I wrap up, one of the things I didn't know, I knew that you had written a few books. In fact, you'd given me one of your books. I had no idea that you were such a voracious writer. And I mean, talk about you've written a lot in this field, and I'm very envious. But maybe talk about some of your books that you've written. And
so none of these are the great American novel. These are, you know, sort of how-to books, and they really came out of some of what we've just been talking about, which is, you know, U.S. companies being skeptical to use Washington as a resource as opposed to an adversary. And so they all sort of have a theme of, how can I use these government programs to be effective in my business? And the more recent ones we did with Thomson Reuters, a big business publishing company. And the joke is they wanted a quick read for an executive on a flight between Chicago and New York that would put them to sleep. And so, you know, our books kind of satisfy that need. So the last one that's probably the most useful to this conversation is we had set up a trading or a training company to help executives understand the tools of trade finance. You know, a lot of people know the term letter of credit, but when you actually ask most people, well, what is a letter of credit? Very few can tell you. So with the lead banker of Mellon Bank, he and I set up something called the American Export Training Institute, which has trained, I don't know, 20,000 executives from banks to corporations to small businesses on the tools of trade finance, everything from letters of credit to documentary collection to credit insurance. And we ended up taking that information and putting it into what we call the trade finance handbook. And a lot of the banks still all go into banks around the country. We did this, gosh, probably 12 years ago, and I still go around to banks and they still have the trade finance handbook in their library. Indeed, Zions Bank, I've been there many times and they have it. They're the head of their international is a guy by the name of TJ Raguso out of Texas, and they're right behind his desk is a trade finance handbook. So so somebody must be using it.
Absolutely. Well, we'll link to all of these, everything that we've discussed in this episode. And Alan, thank you for carving out the time to have this conversation with me. It was fantastic, so critical for the work that we're trying to see accomplished, and just so it's fantastic to be reacquainted with you after all these years, and really look forward to working together as partners in the future on some of these great engagements. It's
We
amazing.
do too.
Your work is fantastic. So thank you so much. And I
Well,
look forward to our next conversation.
Yeah, we look forward to working with you on multiple projects, and on your next trip to Washington, let's get together.
I'd love it. Thanks, Alan.
Take care. Have a good day.
Bye-bye.
Bye-bye.